Good morning. Welcome to the Brew. It's Friday, and that means Paulina is with us today. Today, our three topics: China's stimulus and how it can or cannot help U.S. stocks. We'll see. Meta is making a major AI announcement, and Flutter, the owner of FanDuel, is making a major buyback. Let's check into this right after the opening bell.
I'll work on that.
I've been.
Yeah.
Like
say no more, Lex. Say no more.
By the way, first of all, good morning. Happy Friday.
Good morning.
I read when I logged in, we use StreamYard, as everyone probably knows. I read that there's a new AI feature to StreamYard that will automatically play the intros and outros. So, Mal, we got to get on it. I think we could kind of kick some butt with that, huh?
I like it. I'm in it. I'm on it.
I'm in it. Hi, Paulina.
Hey, Lex. How's it going, Molly?
Hey, Paulina.
Good. Like I said pre-show, it looks like you're getting ready for a big date tonight. You're all dressed up, ready to roll. You said, this whole thing, no, this is just what I hang around in.
Yeah, who knows? Maybe I am going on a date.
Yay, that's great. Well, thanks for coming on today. I'm excited about today. So where do you want to start? You want to start with China or you want to go somewhere else?
I feel like China is a good place to start because it kind of set the tone for a lot of other things. So we can start with the China stimulus news.
Okay, what's going on here?
And how that's been helping some U.S. stocks and China-based stocks go higher too. So the story here is that China's economy has been really bad. That's not new. But what is new is that they have this new stimulus package that is aimed at jumpstarting their economy. And what they did was the central bank in China, they lowered interest rates and injected liquidity into the economy. And as we know from COVID, these are more supportive policies to hopefully spark some growth and stimulate the economy, not only to just benefit companies in China, but that could also help with companies, the U.S. companies that have exposure to China. Mm-hmm. So just a little bit of detail around that. The focus of the package is to give consumers more spending power. China, of course, is the world's second largest economy, so it really matters how consumers spend in that country because it can have a ripple effect in domestic U.S. companies and international companies. So the whole idea here is that hopefully these stimulative policies will provide some sort of a healthier outlook for the Chinese economy. And in response, I can go into which stocks rose, but there was some positive implications for some of the stocks in the U.S.
Okay. Well, let's go right into a couple stocks. Do you have a couple off the cuff? Wait, you don't have cuffs on. Stop. Off the sleeve. Don't say that either. Go ahead.
So for U.S. stocks, and these U.S. stocks, they responded because they have exposure to China. So LVMH was one of them. That's the owner of those luxury brands like Louis Vuitton and Coach and Tom Ford and all that. Actually, I don't think they own Tom Ford, but shares of LVMH went up 19%. Mm-hmm. So it's up over the past 5 trading days, up 19%. Estee Lauder is another one. They have massive exposure into China. I think 1/3 of their business is exposed to China. That stock rose 17% over the past week. And then we had some US listed Chinese stocks that also did pretty well. Think of JD.com, Pinduoduo. They're the parent of Temu, which is that online marketplace that's kind of similar to Amazon. Mm-hmm. And then shares of Alibaba also rose. So there was a significant impact on a lot of stocks.
Okay. I didn't think about the LVMH one when you said that one first. Mal, how many Chanel bags do you have? Like 30?
I buy boards. That's my currency. So how many surfboards does this cost? Is this going to cost? That's my
It's
career.
a lot of surfboards. Let's just put it that way. And this isn't. I don't want you to take this the wrong way. I'm not making a racial statement here, but Asians love that kind of high end luxury. And when we go to those stores, there is a good contingent of Chinese folks and Asian folks that just love that brand. I think, right? So I can make it seem it does make sense to me that LVMH, who owns a massive amount of these high end luxury brands, would do well here, right?
Oh yeah, in China and a lot of the Asian Pacific countries, it's incredibly popular. These high-end brands. Estee Lauder is another high-end brand in terms of skincare and makeup, and we know that the Chinese population, especially the women, they're known to really take care of their skin. They prioritize, having kind of a younger looking skin. I don't know. I follow makeup a lot, and the treatments that, in Korea and Asia that they do, their skin just looks incredible.
Yeah.
So Estee Lauder caters to that audience.
Sure.
However, Estee Lauder really hasn't been doing well in China. So hopefully this stimulus, for the Chinese economy is going to boost some consumer activity, and we'll see some of these companies as a result have better results.
I think one thing would be is that China is competing to be a global primary, and so the problem with the difference between us and them is that they're the majority of their economy is state backed. So we're purely an economic engine, so they can make moves without the economy in mind. So they can flood the market, and in a couple of years, they can sell BYD cars at a loss, and then we are making up for that. So there's some of these limitations on trade are still in place for that reason. So how does that affect us? I think it's important. And so when they make these moves, it is somewhat of an imbalance of the natural flow of a capitalist environment. So
That's a
I
good
think
point.
we keep an eye on them.
Yep.
On that. Yeah.
Okay. All right. I know, again, we're time sensitive here, so let's move along. So what happened at the Meta annual developer conference? There's some big news that came out of that, right, Paulina?
Yeah, so there was the Meta Connect conference this year. It's an annual developer conference, and it was a chance for Meta to kind of showcase its AI capabilities and the products that it has with those AI features. It introduced this new AI model called Llama, and it's a 3.2 model. It's the latest AI model, and it's supposed to do cool things like create images, charts, and graphs, and so forth. So that was exciting for developers. They also had some hardware updates. They unleashed this new Quest headset, and it was a lower cost mixed reality headset, and investors were really excited about that. And then they also introduced
the Quest 3S.
Yes, the Quest 3S. Yeah, and another one was their AR glasses. So there was a prototype for that, and essentially all of these products that were showcased, they show that Meta is at the forefront of artificial intelligence technology, and they are a threat when it comes to who's beating who in the AI race.
What's the AR glasses again? Sorry.
Orion AR glasses. And they're augmented reality. So the difference between virtual reality and augmented reality is virtual. You go completely, you just don't see the room. It's completely made up. Augmented is you put on your glasses and it's like that Star Wars scene where all the Jedi are sitting around, but some are blue, kind of, or the Kingsmen. So you'll be sitting on my couch there, Lex, but you're not really there when I take my glasses off. It incorporates the room. Yeah.
Okay. Do I want the AR ones or the other ones?
I think augmented is augmented, and that's AR, and then VR is virtual.
Virtual.
Yeah. Yeah.
Okay. AR puts me there when I'm not really there. The other one doesn't.
Right. And so I think a nice tie-in with China is, the head honchos don't allow Teslas into to the locations that they travel to, because there's all sorts of surveillance that can be, brought back and forth. So the question comes in, even with Ray-Ban teaming up with Meta and having some of these smart glasses that have cameras in there. Quest also has cameras, and the cars now have cameras. And so we've got this kind of visibility. So it's interesting, I think, always to hold a component of data security, and to look, I think that'll be the next front, because where data security is challenged in a constitutional environment, regulation comes in, and then that will stagnate how the companies are able to operate, free flow or not. So I think that'll be a good thing to watch as well.
Do either of you have one of these deals?
I do.
You do,
I have
for real?
I do.
Do you use it?
Sometimes, yeah.
What do you do with it?
I know, it's really cool. So we have this really neat production house, and so we have this inside, all these open space, and you can map out your rooms and you can just walk in. It's just it's incredible, and it's just getting better by the second. So for instance, I put these on my dad, and he's a pilot as a hobby, and you can fly with the Blue Angels, and you can't even tell that you're not flying with. So you could be golfing with Tiger, and you can see him right there. You can see his shoelaces. It's really neat.
Cool. That's cool. I love it. So this deal with their AI announcement, pretty well received. I think you said, Paulina, should be kind of a little uptick potentially.
Yeah, overall, Wall Street was really bullish. It came away really encouraged by all the AI-related announcements. It really showed that Meta is in a competitive position in the AI market, and Meta's stock actually hit an all-time high following the event. So they're very bullish on Meta's consumer and appetite for all of its AI products.
Wow, Meta is. Anyone want to guess where Meta is? You probably know because you look at it so much. Any guess? Meta?
Oh no, go. Let me drum roll.
$572.
Nice.
In the past 5 years, it's up 217%. 5 years.
Wow.
It's not bad, right?
Not bad. Yeah. That's incredible.
It's incredible. It is. Okay. Good for them. That's awesome. I love it. All right. Next up, Flutter. Now, Flutter owns FanDuel, which I'm more familiar with FanDuel than I am with Flutter.
Yeah.
And I'll tell you a story in a second. Let's let you get to it. They're buying back some shares. So what does this mean for the company's future?
Yeah, so Flutter, as you said, the parent company of FanDuel has authorized a share buyback program of up to $5 billion, and that's expected to be implemented over the next 3 or 4 years. Mm-hmm. And this is pretty huge because it represents about 20% of the company's market cap, mm-hmm. and the stock shot up 8% on the news.
Okay.
So it was a great sign for investors. But another reason why the company's stock rose was because FanDuel, they projected that they're going to get higher revenue. By 2027, they're projecting $21 billion. Mm-hmm. So that's a 14% annual growth rate for the company. So this shows that the company's really optimistic about their projections, and mm-hmm. they're excited about the growth of the company. And investors are have the same sentiment, given that the stock responded positively on the news.
Mm-hmm. So Tradier is up and running on StockTwits. We just wrote a piece on Flutter last week, so go check it out. We'll put the link down below. Cool. So that's really exciting. Yeah.
Was it a positive
yes.
article?
It was positive.
Unbelievable. So I just got going on. My little story is that I just started sports betting. Another vice I need to put my medicine.
Yeah, with lots of wine.
I got every other one, I think, so I might as well throw gambling in there while I'm at it.
Right.
But here's the amazing thing, okay? And this is just crazy. I can take this guy right here and sit during a game and make in-game bets, and the odds change. The actual odds change faster when you're online than the TV shows them changing, because if a team scores and it's detrimental to the odds or whatever, they change on the app before it happens on TV. It's amazing. So it's like almost someone's at the game, piping this stuff. It's just, I'm not saying it's true, but crazy like that.
It's incredible. So a friend of ours was with like 10 of his buddies, and he's watching the UFC game, and he's doing this, and they're having like the best time. And I think one poor guy just lost his tail, lost his shirt on it, but it's fine.
Oh, I love it. So I don't know much about it. I mean, I know some things, but I'm learning from my kids and friends, and they're teaching me all this kind of crazy. And I figured out the parlay now, so I can put combinations of things together. I'm like, oh, this is like trading options, except I don't know what the heck I'm doing.
Right.
Perfect.
So
perfect way for me to lose money.
Right. If we're bullish, what's a play?
On FanDuel?
On FLUT, Flutter.
Oh, Flutter. If we're bullish. Well, look if you're bullish straight out, you buy the stock. No questions asked, assuming you have enough money. Second play is you buy deep in the money calls. Again, if you're bullish and you don't care. Third one, the most sensitive one, probably the one that most options trader uses to do some combination of a spread. Okay. And that's what we like to do, right? Because we don't actually know whether it's going up or down. And I like to put myself in a position where I've got a great probability of profit and the risk reward is capped. So I can't make forever, but I can't lose forever. And it's a good ratio of what I pay or sell it for to what I can make. Those are my favorite. And those can be form of butterflies and condors and short call spreads and short put spreads and long and short the other way. So yeah, all those kind of things. We should do one together, Mal, where we pick one of these and actually lay it up.
All right, let's do it.
Volatilities and all that kind of good stuff.
Okay, so one of our newsletters is going to be on digital betting. So we'll stay tuned. Lex is going to put a piece on Move on some of these companies. So I
love it.
We'll put the link in here too. Yeah.
Yep. Cool.
Thanks, Paulina. This is great. As always.
This is awesome. I was going to ask about that. I think we're getting close to time here, right? Yeah. Real quick. But the stock buybacks are generally a good thing. Not always, but they're generally good, right?
Oh, I would say for the most part, they're very positive news because it shows that the company itself has confidence in its own future growth. And I think that's exactly the case here with Flutter. I just know from my own research that over the next 10 years, this business is just going to keep growing as the regulatory side of things is going to be in the market's favor. There are more and more states that are gaining regulatory approval for sports betting, and that's just going to keep bringing more and more people onto these apps. And FanDuel's in a really good position because right now there's essentially a duopoly in the sports betting market with FanDuel and DraftKings at the top. So with this recent announcement and then the growth projections that are really positive over the next 3 or 4 years, I think that if you're a long-term investor, that Flutter could be a good bet.
Yeah,
I think probably devil's advocate to stock buybacks is the misallocation of resources, which we've seen historically is just like hockey sticking. And so why is that bad? It's short-term focused. Just on stock fluctuations, and some of these things should be going into the infrastructure of the company itself.
So you're saying sometimes when companies make that buyback, they're using that cash in the short term to purchase this, and there might be missing future R&D kind of stuff or whatever is out there. Could potentially 100%. Be out there. Yeah. So it's a little bit more of an immediate payback than investing into a longer term future potentially. I mean, we're not saying that's the case here, but.
Yeah, and the less shares, the more valuation of your own personal shares if you're an owner goes up and all that. So.
I would expect you to go fully CT on us on that one.
No, that's just a fact. But if I'm an owner, I'm thumbs up.
Well, it also could mean that the company feels its shares are too cheap as well.
Yeah, absolutely. So, and if I, as a business owner, I'd like the freedom to buy back the shares. Sometimes you just need to regain control to take it in the right direction. So I think there's benefits to everything.
Okay, last comment. Sorry, I know Paulina's got to go. Yeah. What if a company, maybe this has happened and I don't know this, what if a company bought back all of its shares because it had so much cash and removed it from the public market? Could it do that?
Ooh, well, wouldn't that take sort of a board vote probably?
Well, yeah, I'm assuming all that falls into place.
And I'm assuming
delist themselves and they say, okay, no more regulations. So take that.
It's Operation Trader Joe's. Never go public.
Never go public, or Fidelity for that matter.
Right.
Or Cargill.
Right.
Pretty big companies that never went public. All right, Paulina, great. Good to see you. I don't know who the Eagles are playing this weekend. I forget. But I bet against them last weekend.
Oh, how could you?
I know. I didn't want to tell you that, but I did. I'm in this pool, so I had to take the other guys. I think the other guys won handily. So
Yeah,
no offense.
it's okay. It's
We'll
all right.
hope
I'll
for
come
better
back.
times. So, all right. You have a great weekend. See you next week.
Thanks.
And happy trading. All right.
Bye, everyone.
Bye, everyone.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.